Yesterday's trade was quite choppy. In the European session, the euro edged higher, driven by rather upbeat data on Germany's factory orders. Later on, the focus shifted to US statistics. The ADP National Employment Report showed that private sector jobs surged by 497,000 in June, as well as above the 225,000 estimate. As a result, the euro plunged while data on US services activity fueled its downside momentum. The ISM services PMI climbed to 53.9 in June from 50.3 a month earlier, indicating growth in the sector and reinforcing expectations of further interest rate hikes by the Fed. Nevertheless, Europe's single currency managed to recoup losses and closed on a positive note. As for the British pound, the situation was similar. Today's macroeconomic calendar includes a batch of crucial statistics. Traders may take notice of UK house prices, Italian retail sales, as well as speeches by ECB members. However, all eyes will be on data on the US labor market. The unemployment rate is expected to come in at 3.6% in June, down from 3.7% in the prior month. US non-farm payrolls are forecast to have increased by 225,000 last month after adding 339,000 jobs in May. If indicators exceed analysts' estimates, risky assets will most likely suffer heavy losses amid a stronger greenback. After all, strong US data will allow the Fed to keep lifting interest rates, especially given the latest upward revision to first quarter GDP growth. Furthermore, it is worth paying attention to data on average hourly earnings and the labor force participation rate in the United States. Also, ECB President Christine Lagarde is set to speak today. However, her statement is unlikely to have a severe impact on market sentiment, as the regulator intends to raise interest rates further. From a technical point of view, the euro-dollar pair is trading near the upper boundary of the sideways range. An advance to 1.0906 followed by a false breakout at this level will create a strong sell signal, thus bringing the euro back down to 1.0871. If the price breaks through this level and tests it from the bottom up amid US non-farm payrolls, the volume of short positions will increase further. In this case, the euro is expected to dip below 1.0836, heading towards 1.0808 and 1.0777. At these levels, I recommend going short on a rebound. Long positions at 1.0871 and 1.0836 can be considered only amid a false breakout. If the euro consolidates above 1.0906, supported by downbeat data on US non-farm payrolls, it will most likely extend gains to 1.0933 and probably 1.0975. At the mark of 1.0975, it would be a wise decision to go short on a rebound, counting on an intraday correction of 25-30 pips. Short positions at 1.0906 and 1.0933 will be relevant only in the event of a false breakout. Speaking of the British currency, a false breakout at 1.2757 will make it possible to go short. Long positions can be opened at around 1.2717, provided that the price fails to fix below this mark. If sterling breaks through 1.2757 and tests it from the top down following the release of US statistics, it will most likely gain strong upside momentum, heading for 1.2798 and 1.2834. At the level of 1.2834, traders are recommended to go short on a rebound. Short positions at 1.2798 and 1.2757 can be considered amid a false breakout. Alternatively, if the British pound comes under pressures from strong US labor market data and fixes below 1.2717, it will dive to 1.2675 and probably 1.2626. At the mark of 1.2626, it will be possible to buy the pair on a rebound to catch an intraday correction of 35-40 pips. Going long at 1.2675 and 1.2717 will be relevant only in case of a false breakout. Good luck and have a great weekend.